So let us get into the problems and solutions in accounting equation. You can have a look at this question here. Let me read this for you. So A had the following transactions. Use accounting equation to show their effect on his assets, liabilities and owner's equity. We have around 12 transactions here. Ideally, what to do? Go through each and every transaction. Try to identify what are the accounts involved in it. And then try to develop the accounting equation in detail. Now let us go one by one, see how accounting equation can be prepared. So let me start with the first one. That is, started business with cash 5,000 rupees. When we say started business with cash 5,000 rupees, it is nothing but capital invested by the owner to the business. So when you look at the point number 1 here, assets will go up in the name of cash 5,000. Parallelly, owner's equity will go up in the name of capital 5,000 rupees. Can you look at the way this accounting equation details are given here? Like I have broken the assets into 4 parts: cash, stock, furniture and debtors. Similarly, liabilities into 2 parts: creditors and loan. Of course, owner's equity, I have given it as just a single item. Normally, most of the books present this way. Here also we can go into the details like income, expense, capital, drawings, dividends and so on. I have just followed what books normally do. Now you may wonder how in the very beginning I got all these jargons. That is why I said you have to go through the problem thoroughly, pick up each and every transaction, identify what are the accounts involved there. Once you have the complete list, then you can come and prepare this. Then it's all about just filling the numbers here. That's all. Anyhow, let me take up each and every transaction and explain you how accounting equation gets affected by that. Now let me come to the second one. Purchased goods on credit 400. I repeat, purchased goods on credit 400. So coming to the second one, purchased goods on credit. So stock coming in. So assets will go up in the name of stock. But have we paid for it? No way. So parallelly, your liabilities in the name of creditors will go up by 400 rupees. That is where your accounting equation gets matched. So now let me come to the third one. Purchased goods for cash 100 rupees. Purchased goods for cash 100 rupees. So coming to the third one, purchased goods for cash. So obviously your assets will go up in the name of stock, but because you are paying cash, your assets will go down in the name of cash. Again, both increase and decrease happening in the asset side itself. So your accounting equation matches. So now let us come to the fourth one. Purchased furniture 50 rupees. To repeat, purchased furniture 50 rupees. Let us look at the accounting equation number 4 now. Because you have purchased furniture, assets will go up in the name of furniture. And because you have paid cash for it, assets will go down in the name of cash 50 rupees. So both increase and decrease happening in the asset side itself. So accounting equation matches. So let us come to the fifth one. Withdrew for personal use, 70 rupees. Repeat, withdrew for personal use, 70 rupees. So when you come to the accounting equation, fifth one, because owner withdrew, it's nothing but drawings, so owner's equity will go down in the name of drawings by 70 rupees. Parallelly, in the asset side, cash will go down by 70 rupees. So the equation matches. So let us come to the sixth one now. Paid rent 20 rupees. When you say paid rent 20 rupees, what happens in the accounting equation? Coming to the sixth one, because you pay rent and rent is an expense, owner's equity goes down by 20 rupees. You all know very well, any income gets added, any expense gets deducted from owner's equity. Parallelly, because it is paid in cash, assets goes down in the name of cash by 20 rupees. Next, let us come to the seventh one. Interest received 10 rupees. I repeat, received interest 10 rupees. Let us look into the seventh one. Because interest received is an income, any income will push up the owner's equity. So owner's equity goes up by 10 rupees. Parallelly, because you receive that in the form of cash, your assets goes up in the name of cash by 10 rupees. Now let us come to the eighth one. Sold goods costing 50 rupees on credit for 70 rupees. It's a bit a complicated one. We have to go this in detail. Just to repeat the transaction. Sold goods costing 50 rupees on credit for 70 rupees. So coming to the eighth one now. Just now we saw 50 rupees worth stock sold for 70 rupees on credit. So let us try to bring one by one here. Because you are selling for credit, your debtors in the asset side will go up by 70 rupees. Who are debtors? To whom we sell goods on credit. When we sell goods, obviously stock goes out. But what is the value of stock going out? It's only 50 rupees. The difference between these two is what we call as profit. In simple terms, 50 rupees worth stock we are selling for 70 rupees, making a profit of 20 rupees. And you all know very well, profit belongs to owners. That is why your owner's equity will go up by 20 rupees. Thereby again, the left side of the equation matches the right side of the equation. Coming to the ninth, paid to creditors 40 rupees. Paid to creditors 40 rupees. You can make a very easy guess here. When we pay, obviously your cash will go down. And having paid, your creditors balance should also go down because you already paid them. So your assets goes down by 40 rupees cash. Liabilities goes down by 40 rupees in creditors. So coming to the 10th one, Paid for salaries 20 rupees. Paid for salaries 20 rupees. Because you pay in cash, obviously your cash will go down by 20 rupees, and this being an expense should bring down your owner's equity. So your assets goes down by 20 rupees cash, owner's equity goes down by 20 rupees because of expense. Coming to the 11th one now. Further capital invested 1000 rupees. Further capital invested 1000 rupees. Meaning owner has brought in 1000 rupees more by way of capital. So whenever owner brings in capital, your cash goes up by 1000 rupees. Parallelly, owner's equity also goes up by 1000 rupees. So the equation holds good. Finally, the last one, borrowed from B 1000 rupees. Borrowed from B 1000 rupees. So your cash balance goes up by 1000 rupees because you are getting money, and because you have borrowed it, you have created a liability in the name of loan. So your liabilities goes up by 1000 rupees, and your accounting equation matches. Now just total each and every item here. You can start with cash, total it to 6,710, stock 450, furniture 50, debtors 70. Similarly, total your liabilities, creditors, loan, and your owner's equity 5,920. Once we have the individual total, now we can go for the grand total. What I mean by grand total? Knowing the total of all the assets, that is add 6,710 with 450, 50 and 70 to know total assets is 7,280. Add the liabilities 360 and 1,000 to know 1,360, and we have owner's equity 5,920. Now if you add liabilities and owner's equity, you end up with the total assets, and this is your final answer. So let me repeat how to know these jargons. How to know these jargons in the very beginning. Go through the problem fully, pick up the accounts. When you go through every transaction, you know what are the accounts that will be involved, make a separate list of it, then come and prepare this template or this skeleton, assets, liabilities, owner's equity, place all this under. Then it's all just about filling the numbers down under, and then you can cross check whether your total assets matches liabilities and owner's equity. Thank you.